Hi guys, welcome to Crypto Boy in Oz. Mark here, just doing another quick video recap of today's markets. If you're like me and you love crypto and you love money, then this is the channel for you. And if you're like me also and you just woke up this morning and went on CoinMarketCap just to see what's going on in the markets, you'll have noticed that there's been one hell of a dump. One hell of a dump in prices. Bitcoin, I think, got down to $46,000. It went down 15%. I think it's actually on its way back up now a little bit, but it's a hell of a I mean, a lot of people will be, especially the dumb money in the space, a lot of people will be panicking and probably bought in, and as quick as they've bought in, they'll be selling off to get back out because it'll probably put the fear of God in them. But you've got to remember, these are the cycles in the crypto world. Prices go up, prices come down, and every now and then you get big corrections, and I think that's what's happened now. We've got a big correction. Often it's caused by whales, where they'll do a big price dump to set off like a chain reaction, where then everything follows in its suit. Then, I mean, if you look at right now at this moment, Bitcoin's down 12%. It's actually back up to $50,000. It was 48,000 momentarily. So this is a hell of a time to get back in. If you've got cash, if you've got fiat currency, if you were lucky enough to see this coming and you pulled out early, put it into a stable coin, now's the time to jump back in, because you can just create more Ethereum, create more Bitcoin, or whatever coin you were into originally. You can just create more. I am actually gutted. I actually pulled out. I had some money in. I've got quite a few Polkadot, quite a few Cardano, and I actually pulled it out. Not all of it, a portion of it. Pulled it out and I put it in ETH, because I noticed that ETH was performing a little bit better. Because every time I pull out into a stable coin, you've got that kind of panic where you're thinking, oh my god, I've pulled it into stable coin, so if anything happens in the markets, you actually pull yourself out of the markets. So if anything happens, you get a pump, you made the wrong call, everything's on the way up and you're left down here. It's not a good feeling, so you kind of always want to get back in the second you get out. But now, like, I went into ETH and I wish so much I'd gone into BUSD or any type of stable coin, because I'd have seen it this morning, jump back in, and I'd have made another 10% on what I took out. And that's where you've got to make the money sometimes. Like, sometimes you want the cash, like you see opportunity and you want cash, and you don't always have to bring cash in from the outside world. It's not like you need to go and earn it physically in your day job and put that into crypto. If you're savvy about it and you watch the charts and you see you can forecast something that's going to happen, you can just wait for the signals and the signs that you're going to get a dip, stable coin it, keep your eye on the charts, and then bump back in. Problem being, cryptocurrency doesn't finish. It's not got no close at the end of the day. It runs 24/7, 7 days a week, 365 days a year. So when you're sleeping, sometimes you miss opportunity. So I woke up this morning and I'm looking at Bitcoin down at 40. I don't know if it was $44,000 or $46,000, and I'm like, and by the time that has happened, you can't FOMO in, because chances are that price point is the low cap, it's the low point in the market. That's as low as it's going to go. And it's the same in reverse. You get a lot of people that they'll see something going up and they'll jump in, but it's like it's human nature, but it's completely the wrong way around doing it. when you see green, when the prices are going up, or you look at charts and you've got green candles and you've got like a stack of green candles where it's been pumping, that's not when you buy. That's more when you sell. If you're looking at like the MACD charts, and you're looking on like trading view, and you're looking at the candles, and you've got your MACD chart up, you can kind of see when it's at its peak or when it's at its dip. But I don't really trade, because I think there's a bit of a gamble to it, because you never do know. But I'm not savvy enough and not educated in trading yet to kind of pick them points where you think, right, I'm going to sell. And I did it yesterday. I took it out of Polkadot and Cardano, put it in ETH, and ETH was outperforming, so I was probably making a little bit extra on that. But then woke up this morning and it's all gone to shit. But it'll come back again, and you just gotta. There's a good saying: if in doubt, zoom out, and there's nothing more true than that. As George says on Cryptos R Us, dollar cost average and hodl, and the people that have made the most money are the ones that have just held it. You don't need to trade it. Trading it is like basically chasing the money, which is natural. People want to do that, and people do make money doing that. But if you just buy and hold long term, all the ups and downs, what happen hourly, 4 hourly, daily, weekly, all these ups and downs, you notice it's going up. All these ups and downs all go up, and even in a bear market where Bitcoin, like now in 2017, 2018 January, Bitcoin went to all-time highs. It went to $20,000. Bitcoin Cash, I think, went up to about $5,000 in its peak. I think Ripple, like XRP, went up to about $5. Cardano went to, I think, $1.20. These were obviously their all-time highs, and then they plummeted. They went down. They went down, and Cardano went down to like 2 cents. Bitcoin Cash, I think, went down to $2,200. All these coins, they lost. I think Bitcoin lost 85% of its value from its peak. A lot of the altcoins, 95% losses. And you think there's no coming back from it, and you got people that bought XRP $5. Cardano bought that at $1.20. Bitcoin $20,000, and at the time it's like you think, oh well, crypto's over, it's gone forever, and a lot of people that have sold out and made massive losses. But now we're in 2021. Just zoom out of the chart, and the peak, the parabolic run from like August up to December 2017, it looks like a little dip in the market, up, down, a little peak, little dip. When you zoom out, it doesn't look like much, because over time crypto just goes up, and it's the cycles, the up and down cycles. Every 4 years, the halving. And if you don't know what the halving is, perhaps I'll do a video on that, but there's plenty content out there where you can read about it. But basically, every 4 years, Bitcoin reduces by half of the amount of rewards in each block that you mine. So from day one, when it first started, you got 50 Bitcoin per block. Then 2012, you got 25. 2016 12 and a half, and obviously do the math, and it just continues. And if you think about it, it halves every 4 years. So last year it went down to six and a quarter bitcoins per, sorry, there's a police car coming up. It went down to 6 and a quarter per block of bitcoin. That's in 20, sorry, yeah, in 2020 it went down to 6 and a quarter blocks. But at the same time, at the very same time, as each block is mined, as time progresses, the difficulty in mining, in like computational power, gets more difficult. So it costs more to mine as time progresses, and the reward is much less. So combine that with the influx of people coming into the market, you're getting more and more people as Bitcoin's being adopted more and more. So you've got more people wanting to buy it, and then on top of that, you've got all the institutional investors, like companies like JP Morgan, Goldman Sachs, MicroStrategy, like companies like JP Morgan, Goldman Sachs, MicroStrategy, I'm not pronouncing that right, but that are coming in. And I mean, Tesla was the big one where they kind of bought like 90 billion, billion, I can't think how many he bought now. Basically, Tesla bought a hell of a lot of Bitcoin, and that kind of put a bit of validity to Bitcoin itself. And then MicroStrategy, they ended up buying, I think over the last 6 to 9 months, they've bought 90,000 Bitcoin. And then all these hedge funds, Grayscale, that are getting into Bitcoin. Then you've got Ethereum EFTs, what you can now buy. Coinbase listed on the stock exchange. There's just so much validity now in Bitcoin and Ethereum that it's becoming adopted as store of value, and it's being invested in by the top investment firms around the world and the biggest banks. So it can't be ignored anymore. You've got to look at it and think, this is the future. Blockchain, decentralized, it's the future of where everything's going to be going. So I've kind of gone totally off topic. I mean, I was just doing a quick video to just run down the price drop, what's been happening. Thankfully, now I'm just jumping back to the charts again. I think I made a good call putting it in Ethereum, because Bitcoin's down 12.6%, BNB 10%, Dogecoin 14%, Cardano 8, XRP 13, Polkadot's not too bad. Internet companies down 26%, Bitcoin Cash 19%, so ETH is only like 6%. So out of the bunch, I've probably done all right. If I'd have put it into fiat, well, stable coin, I could have made a little bit more, because obviously that'd have kept level pegging at whatever price I'd have pulled it out at. Anyway, thanks for watching. If you like this video and you want to see more content, or you got any suggestions on the type of content that you want, or you want me to talk about anything in particular, then subscribe to the channel, smash that like button, and then leave some comments. Until next time, invest well and hodl.